Welcome back. We're discussing the impact of global uncertainties on the commodity market. Let's talk about agriculture commodities now on how will Trump's hardline tariff policies affect these commodities and what are the global factors to watch out for. Joining us now to discuss the outlook is Sumit Gupta. He is CEO of Asia Business at McDonald Pelz. Sumit, hi, thank you for joining us. And I want to start with China because China does matter when you talk about commodities because either they are the major producers or consumers or importers of various commodities. Now, with all these tariffs coming in on China, how are you reading commodities and which ones would you keep an eye on?
Hi, Manisha. Good afternoon, and thank you for very much for having me on the show. Actually, your question entails a lot of information because you have started talking about the Trump tariffs and trade. And these are the three components which are going to keep international markets very volatile in years to come. And as you have mentioned, because of the imposition of the possible imposition of the tariffs, the global trade flows are set to change, and it is going to have a profound impact on India. And specifically coming from the point of view of China, which is a major producer and consumer of the commodities, and which is at the center of the trade war, we are going to witness for sure extremely volatile commodities. And what does traders want? They want volatile markets. One thing everybody is going to do in the days to come is to open their Twitter account right in the morning and see what Trump has tweeted.
Sure.
But everything aside, we expect that because of this trade war situation, where potentially Trump is talking about tariff on Chinese product, import of Chinese product. The one weapon which China has used last time was to put tariff on soybeans out of US dominantly, which impacts the heart and soul of the American farmer, which is the key Republican voting area. But personally, I believe it is those things are already accounted for because global production is not going to change. The only thing which is going to change is trade flows. Today, for example, US is exporting beans to China and other countries, and potentially with these tariffs, Brazil and Argentina will start exporting beans to China, and US will export beans to the non-Chinese destination. It will have a profound effect on the trade flows and especially veg oil imports into India. But we are going to live through very interesting times, as you have mentioned, during the duration of Trump tariffs and trade wars.
I get those three T's there, Sumit. But also the other factor to look for is the currency markets, isn't it? Because with the strength in
Yes.
dollar index, we've seen other currencies kind of depreciate, including the Indian rupee. How is these currencies going to impact the kind of global trade that India does? Because we import pulses, we import, and we export a lot of things as well. Rice has been a latest addition as well. How would you look at currencies vis-a-vis various agricultures?
So, as you have mentioned specifically about the currency, we expect Indian rupee to stay weak or potentially because as dollar will gain more strength with these tariffs and the idea going forward is that interest rates in potentially in US will go down. And if Indian rupees depreciate, then it is for sure inflationary for the products that we are going to import that are products like pulses, vegetable oils, and other products. But coming from the export point of view, I will say it is also inflationary. If we are able, our rupee depreciate, then the rice prices in the Indian market goes up. So Indian inflation for sure, because of this trade situation, is going to go up. It is going to impact food prices adversely. But specifically staying on currency and food price dynamics in India, I will still say India is largely a domestic market. And as if our dream of Viksit Bharat, as we have to achieve by 2047, you are going to see us getting integrated in international market a lot more through proteins, through vegetable oil, pulses, and potentially grains also. So I believe we are going to live through turbulent time. Currency is going to be more volatile than what we have seen in last many years. But Indian economic fundamentals are very good. We don't expect Indian currency to depreciate in a big way, but it's going to be a lot more volatile than it was in last 4 to 5 years. tariffs.
Point taken. The other thing, Sumit, really is about Trump moving in sense of oil and gas, and we do understand that he has a softer corner for fossil fuels, that is crude oil.
Yes.
With the way the world has been moving when it comes to biofuels, I mean, we've seen palm do that, we've seen soy in Argentina and Brazil in some sense with that. For the Indian markets as well, we've seen rice and maize and sugar in some sense onto that. How would you see the future of this?
It is one position if you take, people will tell you that you are anti-climate change or you are not pro-liberal mindset. Because what has happened in form of Trump or what is going to happen is a cultural shift. It's not a politics or it is not a political shift. Because for the first time in human history, we are moving from more efficient use of energy to less efficient use of energy. When I'm saying more efficient, that is, fossil fuels are potentially the most efficient sources of energy. And we are moving to solar, wind, and ethanol, and let's say fuel derived from the food. And what I mean to say is potentially Trump is going to be a hawk towards increasing the fuel supply or the crude supply in US. And we have excess supplies world over when it comes to the supply of the crude oil in the world. And we have excess capacities. And with potentially American crude also coming into the global market, it may potentially depress the crude market, provided there is no big macro uncertainty in the world. Because Trump also talks on the side about stopping these global and regional conflicts so that he can bring the prosperity back to US. But staying on crude and commodity dynamics, I believe that usage of food products, especially soybean oil or ethanol, they are more of or sugar into crude for making ethanol in Brazil. They are more of the regional policies to support farmers, and they are going to continue. And it is very difficult for any government to go back on that. And potentially, in most part of the world, you will see these policies which are pro-farmer to continue. They will only change in provided there is a global drought situation or there is a continuous supply shortages. But in absence of that, with the technology increasing yields year on year and demand only increasing at a linear pace, we expect governments to induce food grains and other product demand through friendly policies in fuel.
Fair point. That one final question, Sumit, and this one is on the geopolitics really, and we've seen some crop disturbances this time around, and it has been more to do with weather than anything else within Russia, Ukraine as well. The Red Sea problems have just about continued. The freight charges have been on the higher side for a couple of years now. Maybe the trade across the world has learned to live with that. But what is the outcome that you see of these?
What we have seen between 90s till now is efficient logistics worldwide, benign geopolitical conditions, and which has helped China to grow in a big way. Now it is our turn to grow, and India also look towards more stable geopolitical situation. And we have seen since 2019 post-COVID, we are into a different trajectory, and it has happened every time across the world. When we had a pandemic 100 years back, after that the economic situation worsened. There were a lot more wars because people have to get back to the same trajectory.
Sure.
I personally believe that we have to live through this period of turmoil for a lot longer than anticipated. But I will put it in other context that it is good for India. Because right now the conflict is between US and emerging power in Asia, that is China. And whenever you have a conflict like that, you need friends on your side. And China is a population equivalent to India, and Indian population is our biggest dividend. And I believe whenever technology is same, you have need people to throw at a problem. You need big markets, and US is looking towards Indian market. I believe the conflict of US with China is very supportive India. The conflict in Middle East and Ukraine, Russia has helped India to keep the crude prices low. Because of this conflict, only our energy prices are low. And Indian government has done a great job in managing this geopolitics for the advantage of India. And I believe the where we are positioned at this moment, it is going to help India in a significant way. But
All right.
yes, logistics costs are going to stay high.
Okay. So what you're saying is that India perhaps has more and positive coming its way rather than negative, and much
Yes.
of the policies, as you said, are more India-centric and regional rather than coming in from the broader part of the world. Sumit, as always, thank you so much for joining us. And with that, it's a wrap on this edition of Commodities Champions. Thank you for watching.